Many people don't buy an SUV because they have carefully compared every ownership cost or because they regularly need the extra space or towing capacity. More often, the decision begins with a feeling rather than a calculation. Sitting higher above the road creates a sense of confidence. Advertisements consistently associate larger vehicles with safety and family life, and seeing SUVs everywhere reinforces the impression that they must represent the logical choice. When millions of people make the same purchase, it starts to feel less like a decision and more like the default. Yet defaults are not always designed around efficiency, and when we slow down enough to examine the numbers, a different picture begins to emerge. The modern SUV has become one of the defining products of the American economy. Over the past 2 decades, larger vehicles have steadily replaced many traditional sedans in driveways across the country. Manufacturers discovered that consumers were willing to pay a premium for extra size, elevated seating, and a more rugged appearance, even when most of the vehicle's capabilities would rarely be used. As demand increased, companies shifted more production toward SUVs because these vehicles often generate higher profit margins than comparable cars. The result is a marketplace where consumers are presented with more SUV options than ever before, making the category feel like the obvious choice rather than one option among many. Psychology plays a surprisingly large role in this trend. Human beings naturally associate size with security. A larger home feels safer than a smaller one, a thicker door appears stronger than a thinner one, and a bigger vehicle can create the impression of greater protection. This mental shortcut, sometimes called the bigger is better bias, influences purchasing decisions long before anyone starts comparing insurance premiums or fuel economy. The feeling itself is real, but feelings and financial outcomes do not always move in the same direction. Now imagine two neighbors purchasing new vehicles at roughly the same time. One chooses a midsize sedan, while the other selects a similarly equipped SUV. The SUV costs several $1,000s more before taxes and fees are even considered. Because the purchase price is higher, the buyer often finances a larger amount, resulting in higher monthly payments and additional interest over the life of the loan. Even if the interest rate is identical, borrowing more money simply increases the total cost of ownership. The expenses continue after leaving the dealership. SUVs generally weigh more than comparable cars, and moving more weight requires more energy. Even relatively efficient sport utility vehicles often consume more fuel than similarly sized sedans. If fuel prices rise over the coming years, that difference becomes more noticeable. Instead of paying slightly more once, the owner pays slightly more every week, every month, and every year. Small differences repeated hundreds of times gradually become meaningful expenses. Insurance is another overlooked factor. Premiums depend on many variables including location, driving history, repair costs, theft rates, and vehicle value. Because SUVs are often more expensive to replace or repair after collisions, insurance costs may also be higher. Maintenance expenses can increase as well. Larger tires typically cost more than smaller ones, heavier vehicles can wear certain components more quickly, and replacement parts may carry higher prices. None of these costs seems dramatic on its own, but together they form a pattern that quietly raises the long-term cost of ownership. There is also an economic concept known as opportunity cost. Every additional dollar spent on transportation is a dollar that cannot be used somewhere else. It could have strengthened an emergency fund, reduced debt, contributed to retirement savings, or simply provided greater financial flexibility during unexpected events. Opportunity cost is easy to ignore because it represents something that never happens rather than something we can see. Yet over many years, these invisible trade-offs often matter just as much as the visible expenses. None of this means SUVs are inherently poor purchases. For families who regularly transport several passengers, people who tow trailers, or drivers who frequently encounter severe weather or difficult terrain, the additional capability may fully justify the higher costs. The key question is not whether an SUV has value, but whether that value matches the way it will actually be used. Buying capacity that remains unused most of the time is similar to paying for a larger house with empty rooms or a premium subscription filled with features that are never opened. The broader lesson extends beyond vehicles. Financial decisions are rarely determined by mathematics alone. They are shaped by identity, habits, advertising, social expectations, and the comfort of following the crowd. When enough people choose the same product, it begins to feel unquestionably necessary, even if the underlying economics tell a more nuanced story. Before making any major purchase, it can be useful to replace a simple question like, "Can I afford this?" with a more revealing one, "Am I paying for something I will consistently use?" That shift in perspective transforms buying decisions from emotional reactions into thoughtful evaluations. Sometimes the larger purchase truly is the right one. Other times, the smartest financial choice is not the one that feels biggest or safest at first glance, but the one that quietly leaves more resources available for the goals that matter.